It's a choppy trade as benchmarks keep swinging between gains and losses. The Nifty recoups losses to trade near the 25,800 mark with broader indices moving in tandem. Healthy gains in consumer durables and oil and gas stocks lend support. IT stocks are under sharp pressure, tracking heavy losses in US tech ADRs after Anthropic launched a new AI plugin that could automate outsourced legal work. The development has sparked fears of demand disruption. Financial bids for IDBI Bank are due later this week, with Kotak Mahindra Bank and Fairfax India Holdings leading the race. Emirates NBD is unlikely to bid, while Oaktree Capital Management may participate. Sources have revealed the fine print of the long-term tax holiday for foreign cloud service providers using Indian data centers. The move offers certainty on global income taxation, provided firms route services to notified Indian data centers and resellers approved by Indian Ministry. Hello and welcome. We're watching closing trades here on ET Now. I'm Harsh Saita, and when you're looking at the Nifty, it's up around 0.1% thereabouts. But really, in focus today is the IT index. It's down 6% in trade. Not sure when is the last time we saw this kind of a cut on the Nifty IT index. Let's also look at the contributors on the Nifty 50 index, because that also gives you a sense as to what kind of drag is IT creating on the index. Infosys, 94 points, negative contribution to the Nifty 50 index. TCS, 52. HCL Tech plus Tech Mahindra, 30 points. So what you've got is 4 of the IT players contributing roughly 170 to 180 negative points on the Nifty 50 index. And despite that, the Nifty is surprisingly resilient, and that is because the breadth of on the Nifty 50 index is skewed to the advances, and within those advances, some of the top gainers are Trent up 4%, ONGC, Eternal, Max Health, Maruti. Those are our top 5 gainers, all gaining 2% plus in trade today. So what we're seeing is that tilt is what is aiding the index. 36 gainers, 37 gainers to just about 13 losers, and that's what is aiding the index overall. Again, in terms of contributors, ICICI Bank, Reliance, HDFC Bank, some of the heavyweights, Eternal as well, just given the kind of gains it's posting, is aiding the contribution on the Nifty 50. So that's really the tilt of play. In terms of the Nifty Bank, it's up around 1/3% thereabouts. Let me flag that off very quickly. And within mid-cap and small-cap, the gains are far more pronounced. 0.6% higher on the Nifty small cap index, 0.4% higher on the Nifty mid cap index. So that's where you're seeing some bit of traction when it comes to gains. Within the Nifty 500 basket, very quickly speaking, again, the gainers and losers, the tilt of the losers is towards IT, and the gainers, in fact, let me quickly pull some of those up. A BLS, a Vellore Estate, Lloyd's Metals on the back of numbers up 10%, Devyani, IDBI Bank on the back of the news of the divestiture, Adani Power, Sapphire Foods, all of them are perked up. Again, on the back of numbers, you'll see some of the QSR names coming back to focus, and you're seeing that rotation at play. JBM Auto, Keynes Tech are just some of the other gainers, along with the Wockhardt, all up 5% each. Among the losers, again, the dominant pack is IT. Eclerx is down 9%, Latent View down 8%, Triveni Turbines on the back of, again, numbers is down 7.5+%. You'll also see pressure on SciLife, Coforge, and LTI Mindtree. HAL also down 6% in trade. That's really your tilt in terms of the broader markets as well. Just last off, I want to flag off the sectoral mix and how that is playing out. Of course, Nifty IT is the dominant one in that. 1% lower on the Nifty India Defense Index though. 2% higher on oil and gas and energy. Metal is up 1.3. Consumption up 1.3. Auto is up over 1% as well. So that's really the tilt. Again, FMCG also doing reasonably okay, a third of a percent higher on the Nifty FMCG index. But that's broadly the way in which markets are shaping up at this hour. But let me bring in Ravinder, who is here with what are the stocks that are in news on the back of corporate announcements and are buzzing. Ravinder, what's on your list?
Well, yes, from the real estate space, Signature Global is in focus. The company reported a weak set of number in Q3 FY26, and in this quarter, company reported net loss as 45 crore as compared to profit of 29 crore year-on-year basis, and company reported loss for the second consecutive quarter. But management, the con call said that there is a gap between the current achievement and the overall guidance for the year. But management is positive that strong Q4 activity in sales, collections, and completion will significantly close this gap. Though stock is still trading in red but has recovered from the 7% of the day's low. So back of this positive management commentary, Signature Global is in focus. Angel One is also in focus on the back of their strong monthly business update, where in January month, company's client base saw an uptick of approximately 2% month-on-month basis, and average daily order is also showing good uptick of more than 25% on month-on-month basis. On the back of order win, Varroc Engineering is also in focus, where company has secured a strategic 6-year contract with the global EV OEM to supply AC bidirectional wall chargers with an estimated peak annual revenue of rupees 439 crore. Lloyd Metals is also in focus on the back of the strong Q3 FY26 earning, where in Q3 company's revenue has increased from 1675 crore to 5058 crore, and EBITDA margin has also expanded by more than 250 basis point year-on-year basis. MCure Pharma is also in focus on the back of the strong earning, where company reported a strong set of number in Q3, and company's profits saw an uptick of 50% year-on-year basis from 153 crore to 230 crore. Tamil Nadu Mercantile Bank is also in focus on the back of their strong Q3 number, where in Q3 company's net profit was up by 14% year-on-year basis, and NI has also increased from 570 crore to 646 crore. Axis Gate is also in focus on the back of their order win, where company's subsidiary Mistral Solution Private Limited has received contract for design, development and production from its US customer post the Indo and US trade deal, and the cost of order is approximately USD 1.4 million. And lastly, Exact Industry is also in focus on the back of positive brokerage note, where Nomura has upgraded the stock to buy from the neutral rating and with target price rupees 398 as compared to earlier target price rupees 427. They say that for the lead asset business, they expect growth to recover further, which is led by strong automotive demand and a gradual revival in the industrial segment on a low base. So back of this, Exact Industry is also in focus.
Okay, thank you so much for that, Ravinder. Those are some of the stocks which are on our radar. Kunal, let me come to you with regard to how you're viewing markets. By the way, viewers, Kunal Bothra joining us as he always does every afternoon. Kunal, how are you looking at the move today? Of course, IT is that one pocket which is under pressure, but despite that, maybe 170, 180 negative points contributed by some of those IT names on the Nifty is holding firm.
It's holding firm. I think it's a very good move for the markets today. Good afternoon, first of all.
Good afternoon.
Because today is the day where the real market breadth start to open up. Yesterday was a day, of course, where the markets reacted to the kind of news flow, the tariff, agreement as such. You saw a fervor across a certain set of stocks, certain group of names, certain kind of sectors. But today, I think it's more broad-based. It's not just the market breadth opening up, but I think in many of the stocks which are beaten down, they are the ones which are now trying to get more recognition from traders and investors that maybe this could be a point of the market where value hunting could be done for names. For example, names like Keynes, Dixon Tech, etc. These were stocks which were beaten down brutally over the last 2-3 months or so, falling by more than 40-50% in a very short span of time. So I think when these stocks try and make a comeback, it indicates that the markets, the texture of the markets have improved quite positively. We are also seeing that the India VIX has dropped down to 12 levels. I actually anticipated this to happen in the next couple of days, but it's good to see that the VIX has dropped down to 12, which means that again the markets have gone back into a neutral zone, expecting that this uptrend would probably continue. We could be in much more calmer manner, a calmer phase for the index. The best part about the VIX is that when you see the VIX dropping, the intraday volatility drops down. So today also the markets were very, very little volatile and not hugely volatile like maybe last week, where there was a range of maybe 200 to 50 points for the Nifty on an average. So that's dropped down to almost maybe a 70, 80 points range for the Nifty. That also I think is overall very positive.
Okay, and IT stocks, Kunal, it's very difficult to not talk IT on a day like this. Of course, there's that risk of Anthropic and the AI that they have built and the solutions that they offer, and there could potentially be a risk to Indian IT services companies as a result of that, even though most of the voices that we've spoken to seem to suggest that Indian IT should largely be resilient. But really, market is taking this very, very differently. 6% low on the Nifty IT and frontline names taking an absolute beating in trade. That's, of course, the ADRs. But really, what you want to look at is now is what our stock price is doing. And let's pull up some of those stock prices actually and see what is the nature of the move in terms of IT. There you go. Persistent down 5, Tech Mahindra down 5, Infi down 7.5%. That's some real damage being done, Kunal. Good time to maybe nibble on. How do you position yourself from an IT perspective?
So in the morning I was a bit iffy about buying IT stocks because my sense was that maybe the carnage could be a little bit more steeper, not just a 4 or 5% drop for the likes of Infosys. So it's good to see that the stocks have corrected by 8 to 8.5%, the likes of Infosys, etc. But what's actually startling in terms of the observation for the Nifty IT index, which I'm seeing right now on the daily charts, is yesterday when the IT index opened at 40,000 mark, we were above the 3.5 sigma Bollinger Band deviation for the index, which is unsustainable, and that's why you saw the Nifty IT index correcting intraday yesterday. Today, when the IT index opened at the lower side at 35,800, 850 mark, we are back below the 3.5 sigma Bollinger Band. So which means that this could actually be a good point where traders could look at contra buying on the IT index, specifically with this kind of a divergence which has occurred on the statistic part. So this probably indicates that we are at the point where the pain or the selling would be absorbed very quickly. Maybe I think in the next 1 or 2 days, there could be a point where a near-term bottom could be formed for many of these IT names. However, I would believe that one has to start being a little bit more selective. You can't buy the entire basket. So I would probably believe that maybe the likes of HCL Tech and Tech Mahindra could be the top 2 names which one could look at. And once the recovery starts to shape up for the IT index broadly, then I think better opportunities may open up from the large cap and the mid cap universe.
HCL Tech, Tech Mahindra. Those are the 2 names for you viewers. Of course, difficult to determine as to how much or when that upside will come, Kunal. But you still seem to suggest that there is an upside there.
Yeah, because 3.5 to 4 standard deviation bands they are steep aberrations. It's like maybe 1 in 5,000 kind of a probability which you're working out for. That's the favorable probability in your stance when you're looking to have such kind of a contra trades. And these opportunities are very rare as such. So with the fact that the IT index is still at the negative side and still trading at those 3.5 sigma Bollinger Bands, I actually believe that this could be a good time to start looking at more contra, purely as a trading, not purely on the fundamental side, of course, but purely as a trading bet, say for the next 1 or 2 days.
Okay. Now let's go across. We also caught up with Sandeep Agarwal of Sovilo Investment Managers to understand his take on IT earnings. As well as what are the trends that are emerging in terms of the roadmap ahead for India's IT industry. Listening.
You will see a slow death of the multiple. The multiples today also, while people are publishing 10-year average PE and all that, I think that is grossly wrong because growth rates have changed. So I think the PEG ratios will have to be more measured and calculated. I'm positively surprised with the numbers in this quarter. And let me tell you that, it strengthens my belief that we are the most efficient country when it comes to software services. All the results you see, there is a flawless execution in such tough environment. They have been able to manage their margins. They have been able to grow something. So, fabulous job. All the management, I will not call out anyone. Everyone has done a phenomenal job. And it gives me a lot more conviction that this is one industry where we are number 1 in the world and probably will continue to be so.
When the parliament is in right here on ET Now. And marginally in the green, it's really IT all the way, which has been dragging the markets down from the word go. In fact, Infosys alone is contributing to over 100-point fall on the Nifty. As we speak, it's almost headed in for an 8% decline in the futures alone. TCS down 6.5%, Coforge down 6%, LTIM down 6%. But let's switch focus and let's talk about what's been happening within the financial markets. And here's an ET Now exclusive. Financial bids, it seems, for IDBI Bank are due later this week, with Kotak Mahindra Bank and Fairfax India Holdings leading the race. Ankur Mishra, my colleague, is here with more exclusive details on what he's picking up from his sources.
Yes, the race for IDBI Bank is heating up, and we have been informed through sources that three bidders are considering to bid for the bank. We understand that Kotak Mahindra Bank as well as Fairfax are leading the race. They are likely to submit the bid, but even Oaktree Capital is considering to submit the bid, and final decision can be taken soon. However, the fourth bidder, which was there in the race, Emirates NBD, is unlikely to submit the bid because they have already had a deal with another bank. Now, as far as this process is concerned, we have been told that this week is the deadline for submitting financial bids, and that will be done by the bidders, and later on in the next week the bids are likely to be opened. Remember, when we asked this question about IDBI Bank to even Deepan's secretary, we were told that the process is on, and the expectations are that by end of this fiscal year the process should be completed, and we may soon see a new bidder, a new owner of IDBI Bank.
Okay, that's the exclusive right now on IDBI Bank. Just looking at a handful of gainers right now. The entire EMS as well as the white good play really has come to the fore. So look at a PG Electroplast, for instance. That's holding up 6.5% right now in trade. And Keynes and Dixon have pretty much been a one-way move up ever since, post-budget, actually. Monday is when they began holding out in trade. So both those stocks are holding up 6.25% to almost a 6% gain. Crompton is well looking smart with a 5.25% up move. Along with that, NMDC, which is holding up 5% as we speak right now. Kunal, anything interesting on the charts of any of these names, a Keynes and a Dixon?
Yeah, I think both of these stocks are starting to show signs of good recovery from their multi-week, multi-month lows. And I think it's a good sign that it's coming at a point where the markets require many of these underperforming stocks to not just see a short covering, but come back towards a zone where maybe the selling's pressure for these stocks, which was at an extreme, to come back into more of a balanced to neutral zone. These stocks are still below their long-term averages when you try and compare it for both Dixon as well as Keynes, and specifically in the last 2 months where these stocks have sold off very aggressively. I think in that sense, I would probably expect that these stocks should have more legs on the upside. Would look out for maybe another 7 to 8% on the very near-term upside for both of these names. It may not happen on an immediate basis, but I think positionally, say for the next 1 to 2 weeks, you might probably expect that these stocks may go into one more round of short covering and potentially another 7 to 8% higher.
I also wonder, Kunal, if things change with regard to some of the power financiers. But I'll come to you on that. In fact, let's bring in Unmesh Sharma, Head of Institutional Equities at HDFC Securities, joining us. Unmesh, great having you here. First off, Unmesh, I know this is more of an IT-centric discussion. Talk to us about what this Anthropic development means from an Indian IT standpoint, in your opinion. Generally, do you believe that it's going to be life-changing for them, likely?
So, look, I think we were also in the US marketing about October, November last year. And what we noticed is that consistently everyone seems to be concerned about what is the impact for AI on the Indian IT sector, and hence given the weight and the index, what happens to the markets. One is the perception very clearly is that we are not at the cutting edge of the AI, but at the same point in time, there seems to be growing view that Indian IT companies will, of course, handhold all the global majors to be implementing the AI kind of rollout. Now, as far as this specific concern about agentic AI is concerned, honestly, while yes, the announcement came last night, but at the same point in time, is there any lack of expectation that a lot of mundane jobs are going to be replaced by AI. Well, I thought that that was the point of AI, right? So I think what is happening is that while there is a knee-jerk reaction to these stocks, at the same point in time, would we really go short on them incrementally from here? The answer is no. We have a neutral position on Indian IT companies in the in our model portfolio, and we continue to hold that. We believe, continue to believe that while India is not at the cutting edge of AI innovation, at the same point in time, as far as implementation of AI solutions across corporates is concerned, the Indian companies will continue to play a fairly large role on that.
Right. Okay. So, Unmesh, other than that, just wanted to understand how is it that you would approach IT right now? While the correction, of course, is quite massive, it's just about begun. Does it seem like the pain could persist for some more days?
So on all things related to AI and for that matter globally and specifically for India as well, we believe that while we had a spate of good news, at the same point in time, we expect that the entire market will remain volatile. AI-related news flow will continue to keep it like this in the IT sector as well. But given valuations, if you are a holder and an equal weight kind of position in the index, we would just motor through this kind of period in the Indian IT space. If you are underweight, every time there is a dip, we believe that you should bring it up to equal weight. But also one more thing that while the markets are heaving a sigh of relief as to what has happened on the tariff front, we do realize that we continue to remain an extremely uncertain world in a market where valuations continue to remain more than a standard deviation above mean. So you put that into context, we believe that while the worst of the volatility may be over, at the same point in time, this is not a normalization as far as volatility. So we continue to remain fairly cautious, and within that, given reasonable valuations, IT remains our equal weight position.
Mish, yes, IT is one of those areas or sectors of concern today, but everything else has run up substantially over the last couple of days, given the India-US trade agreement of sorts, or at least the fact that there is a trade deal in place. How important are the contours of that deal? And have markets run up too early, too quickly, in your opinion?
So two things. One is there is what is the real impact? Needless to say, the stock market 101 is that there has to be an impact on earnings as well as on the multiples. Now, as far as earnings is concerned, we all know that the India trade deal with the US on a Nifty at an aggregate level is not a significant mover. It was not on the way down and it is not on the way up as well. Having said that, what happens is that this leads to significant relief on two fronts. One is that the currency will probably not depreciate as strongly as it was doing before, because finally that trade is an important player in that. So speculators to that extent will not be impacted. So from a foreign perspective, the market returns, hurdle rates kind of go down. And secondly, for anyone who was genuinely concerned about India being in a geopolitically weak spot, I think that perception at least has got a little bit sorted. So long-term India remaining in the good books of the world majors with the signing of the EU trade deal, and then hopefully and the Britain, and then on top of that is this. So from that perspective, is it a game changer? Answer is no. I think what has happened is that this reaction in the last 2 days has been, you could say, a collective sigh, breath of relief sigh of relief that has gone through the market. And I think that that is what's happening. I think what is happening is that in the next day or two, as we start to look at, you go back to looking at what has happened in the result season, what's happening on earnings, I think we will come back, to reality of where results are going to be delivered. And we believe that, people will forget, move on, and just to this new reality where earnings delivery is still, as compared to valuations, is still not up to the mark.
Right, okay. Unmesh, stay with us. LIC says that its follow-on public offer remains under continuous review with a timing and size which is yet to be decided based on market conditions. LIC is also planning to talk with NSE on the exchange's IPO timeline and will be deciding on a stake sale based on valuation. Hear out an excerpt of that exclusive chat and come back right after this very short break.
All are aware that in the initial public offer when it came, only 3.5% was offered for public, and there's a regulatory requirement that we have to bring it down to by another 10% over a period of time. So in that context, which route has to be taken is a matter of decision. So I will not say OFS or whatever manner is to be taken. So it's a continuous issue of consideration for the corporation, the government also. The only important thing is what is the right time for it, what is the right quantum for which it should come, so that in the overall, this financial space, it does not disturb many things and still creates value for the shareholders and the investors into this thing. So that process is on into consideration. When it will happen, in what form it will happen, is a matter to decision to be finalized.
NSC, what is the stake LIC is currently holding, and are there any contemplations now about you also offering?
Around 9% or so is the portion. But the point is, yes, we will be talking to NSC team also, because it's a process which will go on for next 6-7 months. And based on our assessment of the valuation, what is being offered, and strategically where we want to be, we'll take a consideration on what type of decision we are going to take.
On IDBI, where LIC is the majority owner, again, you are involved in the discussions for the divestment of IDBI. Any kind of color or any kind of detail you can provide us?
See, we are very, one of thing we are very happy that since the time LIC got into as a strategic investor into IDBI, there has been a lot of improvement in the bank, and the share value has significantly improved from there. It was always their decision and regulatory ask also that over a period of time LIC has to bring down its holding from that 49% level to the allowed limit of 15% plus 15% or so. So different considerations have been made, what level we will be there. LIC's position we have clearly spelled out in our disclosures to SEBI. So it's in public domain that we will bring down our stake in this to 15% type of level, and whatever level then we want to decide. On the another aspect that we do not want to be part of the day-to-day management or the board seat, that also has been clearly indicated. But we'll continue to have a stake in the bank as an investor at a level which we feel comfortable and right for the other stakeholders.
So that'll be around 15%, sir.
15% is as per the ID regulations, it is there, and there's a time period up to which it has to come down to. So it's not just straight away you have to come down to 15%. So what we have decided is already disclosed in the SEBI disclosures that we have given. So we'll stick to it, and we'll naturally ensure all the compliances while creating the value for our stakeholders in this.
Welcome back, and you're watching Closing Trades here on ET Now. And one of the stocks or stories of the last few months has been Trent, and set to report its Q3 numbers. Growth concerns, of course, is clear, but can margins surprise on the upside? Really, that's the question that everyone is looking for. Snehi here to tell us what the street is expecting.
Well, yes, Harsh, in fact, to answer your question, margins are expected to surprise on the upside this time around. Let's break down what Trent's Q3 numbers could look like on a standalone year-on-year basis. Numbers are expected to be good, but it's going to be important to watch out for the revenue mark, because in its Q3 update, the company gave the revenue at around 5,220 crores, which is slightly lower than what the consensus estimate is of 5,355 crore. Based on the number that the management has given, the year-on-year growth is at 15%, which is a continued sign of the revenue deceleration that we've been seeing for many quarters in a row for Trent. Other than that, EBITDA is expected to go up by 21%. Net profit is expected to see a very healthy growth at more than 16%, and margins, yes, 18.9% is what we're expecting this time around compared to 18.5%. So a solid uptick of 40 bips on a year-on-year basis is what we're expecting for Trent. We'll get to why this margin is expected to be good, but before that, talking about the store count, in quarter 3, 17 stores added for Westside and 48 added for Zudio, taking the 9-month FY26 total so far to 30 for Westside and 89 for Zudio. So talking about some key expectations, store addition is expected to aid revenue. Store addition has been strong. Revenue per square feet is expected to decline 11% on a year-on-year basis since they've undertaken such massive store expansion. Area growth of 36% year-on-year driven by larger size stores that were added. Revenue growth to lag area growth due to cannibalization of revenues of older stores by newer stores. This is also a concern that brokerages have flagged off quite recently, seeing that Zudio stores are being opened in the same pin codes and they're cannibalizing the existing store sales. And RFID related cost savings in employee costs may aid margins despite a weak SSSG growth that we're expecting. So if you take a look at the revenue deceleration in quarter 2 of last year, this was at 40% revenue growth that has fallen all the way up to expected 15% this time around. So later today when the numbers do come out, watch out for what the same store sales growth number is, finally what the revenue comes down to, what the margins are, demand outlook, and of course this store expansion guidance will be key to watch. But yes, overall, barring this revenue deceleration factor, we're expecting a very decent quarter from Trent.
Well, and Trent has been quite a battered and bruised name. But Kunal, what's the reading on the chart, other than the fact that, of course, it's a big breakout ahead of the numbers today on the stock?
Yeah, it's a good move for the stock pre-result. But I strongly believe that the sub 4,000 mark is actually a very good territory to go for a contraband trend, because after falling by more than 55% in the last 1.5 odd year from 2024, since the time the stock had actually come into the F&O segment, I think post that we've seen the stock selling off very, very sharply. And after 50% to 60% correction, there comes a point where the stock looks extremely attractive. I strongly sense that Trent has reached those kind of territories. I'm not sure how the stock would probably react in terms of post results, but even if in case the stock goes into a retest of the previous lows, that could actually be a very good opportunity. So we are into that zone of the market where the market bet would start to open up, the underperforming stocks would start to be lapped up by many value investors. I would believe in that sense, Trent could be a very good buy at current levels from a longer term perspective.
Okay, that's with regard to Trent. Unmesh Sharma still with us with regard to that conversation that we were having. Unmesh, within retail, what's the tilt in terms of the preference? Is it going to be retailers like Trent, or is it going to be some of the value retailers where there is much more faster growth? The size of the opportunity also looks larger, at least at this point. Rural seems to be in a bit of a recovery mode of sorts, and there is margin upside as operational efficiency starts to play out.
Yeah, so retail has been a tricky one because the valuations actually pretty much across the board have gone too far ahead. Now with the correction, we seem to have come into some kind of sanity, if I may call it that. We believe that broadly, what we do like is wherever there is scope for same-store sales growth to come through, and given that we are living in a low inflation environment, what happens is that it's become quite tough to deliver that, which is why to some extent I would think that value retail is looking a lot better. Can't go into stock specific because of compliance reasons, but broadly that is the tilt for us as well.
Post-budget, does Unmesh, EMS come to the fore? And given the steep correction that's played out in that segment as well, is it a good value buy at this juncture?
Yeah, definitely. I think that is the one space which is definitely going to see a lot of action. There is also, so there are 3 layers to that. One is the fact that the volume growth, the government in any case, EMS has been a story which has played out for many years now, given the government's tilt towards Make in India and Atmanirbhar. On top of that is the fact that it is very clear now that while we are signing all these FTAs, there is a clear indication that over a period of time, what we want to do is as much as possible, the domestic demand has to be met domestically. So the tailwind on that in terms of a multi-year run in double-digit growth, I think is a given. And to give credit to all these companies, we have also seen that they have started to move up the value chain. So not only are they doing very basic assembly, a lot of parts are being manufactured in-house and then, moving up the value chain, so as to speak. So the indigenization percentage will continue to go up. So in that sense, it's a long-term theme. The correction has helped, and we're definitely quite excited with this.
Okay, Unmesh, thank you very much for joining us and giving us your time and your views. Of course, it was great speaking with you.
Thank you. Thanks for having me.
Thank you. Okay, let's shift focus. Exclusive interview with Times Network, Group Editor Navika Kumar. We spoke with the Finance Minister, Nirmala Sitharaman, on the India-US trade deal, focusing on the key details of the deal and the opposition's criticism on this. Here is what the Finance Minister had to say. Listen in.
All these months, in fact years, hasn't Prime Minister Modi taken every decision keeping India's interest top of the priority? He has very clearly chosen India's interest on the top of anything else. Even at a time when war was escalating, even at a time when sanctions were being imposed, we kept India's interest at the top, which is what he'll do every time. I think the people of India trust Prime Minister Modi. You can ask questions, but I'm sure you will get the reply anywhere you ask that the Indian interest will never be compromised by Prime Minister Modi.
मैं माननीय सदस्यों को सूचित करना चाहता हूं कि आगे की कार्रवाई के संदर्भ में दोनों पक्ष व्यापार समझौते से संबंधित आवश्यक तकनीकी प्रक्रियाओं को पूरा करने और कागजी कार्रवाई को अंतिम रूप देने के लिए मिलकर काम करेंगे ताकि इसकी पूरी क्षमता का शीघ्रता से लाभ उठाया जा सके। समझौते की विस्तृत रूपरेखा इन प्रक्रियाओं के समापन के पश्चात तुरंत घोषित की जाएगी। माननीय सदस्यों को भारत के ऊर्जा स्रोतों से संबंधित उन मुद्दों की जानकारी होगी जो इस समझौते पर हुई चर्चाओं के दौरान उठाए गए हैं। मैं स्पष्ट करना चाहता हूं, जैसा कि सरकार ने कई बार सार्वजनिक रूप से कहा है कि 140 करोड़ भारतीयों की ऊर्जा आवश्यकताओं की सुरक्षा सुनिश्चित करना सरकार की सर्वोत्तम प्राथमिकता है। वस्तुनिष्ठ बाजार स्थितियों और बदलते अंतर्राष्ट्रीय परिदृश्यों के अनुरूप ऊर्जा स्रोतों में विविधता लाना हमारी इस कार्यनीति का मूल आधार है। भारत की सभी कार्रवाइयां इसी बात को ध्यान में रखकर की जाती हैं। अतः मैं माननीय सदस्यों से इन मुद्दों को समुचित दृष्टिकोण से देखने का आग्रह करता हूं।
Shares of Sheela Foam surged 13% after strong Q3 results. In fact, 18% on the back of strong Q3 results, with profit jumping over 3 times and margins expanding on solid volume growth. Aarti Drugs slips as margins contracted despite revenue growth. Meanwhile, Kalyani Steel also climbed on robust quarterly performance. The biggest interview of the week. It's Finance Minister's first interview since the announcement of the historic trade deal. She says Indians' interest is paramount for the government. Adds that the fine print will be released soon. Also addresses the concerns over hike in STT on F&O trading. The $500 billion commitment to the US will be over a 5-year period spanning data center equipment, civil nuclear and AI chips. Government sources say India's interests remain protected. Though Section 232 tariff relief is excluded, negotiations are ongoing with a joint statement expected soon. And the RBI begins its MPC meet today with markets expecting a status quo at 5.25% after a 125 basis point cut since 2025. The focus is now on policy transmission amid rupee pressure, tight liquidity and weak private investment.
Okay, let me welcome on board Narendra Solanki to talk about the fundamentals of the markets, and we've got Osho Krishnan as well joining in on the charts. Osho, just want you to analyze what kind of price action do you sense now for the Nifty after the kind of huge volatility that we've seen between Sunday and yesterday, that is?
Very good afternoon. Firstly, I am expecting that market should be remain on the bullish biasness side. So I am expecting that in the coming period also there can be a decent upsurge in the market, although it's the approach should be buy on the dips because we have already seen strong momentum in the last two trading sessions. So definitely one should wait for a breather in the markets and utilize dips to accumulate positions. Even for today also, I was having a bullish view and have shared the same also. But looking at the recent development, I am expecting 25,600, 650 to be seen as the potential strong support for Nifty, and any dips towards the zone of 650 should be utilized to buy position in Nifty on the higher end. 25,800 is being a very critical zone. So at current levels, it will be advisable to stay light on Nifty. And if Nifty sustains above 800 zone, then in the coming period, we can see 26,000 to be retested in 1 to 2 trading sessions.
Narendra, let me come to you. What's the view with regard to IT? Do you buy the dip? Do you hold on? What do you do?
Yeah, good afternoon. I think, if we talk about IT sector as well, the kind of news we have seen yesterday, so definitely it's concerning. And again, it's creating a lot of headwinds for the short term. See, the problem with the sector has always been since last 4 to 6 quarters is the near-term visibility is not there, not coming, and the confidence of the market is not building up about what would happen in the immediate next 2 to 3 quarters. So that has been concerning the markets since last many quarters. And again, we have seen the news regarding the kind of work done by the new AI tool. So which again makes the market rethinks the kind of pricing model the industry would be adapting, because right now it seems like the manpower into your costing model is now going to be a part of history, and you have to reimagine the whole pricing model and how do you account for the kind of workforce you already have. So I think again the industry has to rethink, but yeah, this is going to stay, and the models have to evolve. So again, the near term next immediate 2 quarters are again cloudy. But looking at the medium to long term scene, I think the kind of deal, the order books the companies are having, so they are very fairly robust. So I think it would help them in reinventing themselves and turn the tides on. But yeah, coming to the valuations, we are still below 5-year average valuations, but we are again trading higher than 10-year average valuation. So we are somewhere in the middle. But I think it's not the place wherein you can either go short and neither you can also go long for a revival, at least for the next quarter. So I think it's somewhere you sit out and see how the response of the companies comes about managing this kind of reinvention in the overall industry.
Okay, interesting. So Narendra, what's the call on IT right now? Wait it out. Don't be in a hurry to jump in to buy this decline.
Yes, definitely. Wait and watch is the should be the correct approach. Whatever you have your positions, and instead of building new positions, I think wait and watch is the right strategy.
Okay, talk to us, Osho, with regard to how defense is playing out. And we're starting to see a bit of pressure on a couple of names, including the likes of a HAL. What's the take with regard to some of those defense counters?
No doubt, HL has seen a very strong correction, and that's on the basically news. So I'm expecting that there can be some kind of consolidation or some kind of negative biasness in HL. But overall, on the technical fronts, it is at a very strong support levels. The zone of nearly 4,200 to 4,180 has been a bullish gap of the island reversal candle that we have seen on the daily time frame chart. So I'm expecting that one should not be in a hurry to sell off their positions in HL as of time being. But looking at the recent developments, the counter is not able to being on the higher front. So there has been consistent rejections on the higher zone of 45 to 4600. So one should wait for 4600 to get decisively crossover. Then only can look for buying opportunity in HL. Till that time, better to stay silenced from this counter.
Right, okay, that's the take coming in on some of the defense plays. Today, of course, it's really about Eternal, Trent. These are the names, the beaten down ones, which are making a comeback as we speak right now. ONGC, Maruti, Max, Titan, they're all names which have held out very smartly indeed. Narendra, wanted you to analyze how you read into the Motown sales for the month gone by. Quite impressive, and clearly all that the government has been doing is now reflecting in terms of demand uptick in auto numbers. And what would you recommend buying right now at these levels?
Yeah, definitely the numbers were impressive, and we have seen that the momentum which we have seen since last 2 months has been continuing, and the efforts of the government and the cuts in the GST have really improved the sentiments overall, and the buyers have also been very forthcoming. Now, coming to the sectoral picks, I think we still favor two-wheelers in comparison with the four-wheelers. So in two-wheelers, TVS is our top picks. Now, in four-wheelers, we are positive that overall industry would be showing good numbers, but because the competition is so high, it's not very clear who would be leading because there are a lot of competition at every product bracket. So hence, the overall demand would be divided among the different products. Then after two-wheelers, we are positive on commercial vehicles. In commercial vehicles, I think Ashok Leyland is one of our top picks, and ancillaries also we are positive. So two-wheelers, commercial vehicles, ancillaries, and then comes the passenger vehicle. This is the pecking order we have in auto.
Okay. Narendra, I wonder how you're playing textiles. It's obviously the direct play on the India-US trade deal, but we've seen massive spikes in some of those counters. Let me pull up a few of them. Gokaldas Exports is up a very solid 15+% in trade today itself, but it's up 45% in the last 5 trading sessions. KPR Mills is up 10% in the last 5. Trident is up 12%. Arvind is up 24%. Indocount is up 37%. We can quickly pull those up. And Pearl Global is up 25% in the last 5 trading sessions, up 6% today. We spoke with management as well. How do you play this, Narendra, or is it too late to arrive to the party?
I think definitely textile is one of the sectors which would be benefiting most out of it directly with the FTA, and it has been one of the sectors which has also been hit by the tariffs when these were announced initially, and the kind of stocks you're talking about, they have fallen more than 50% in last 6 to 9 months. So yes, rebound has been very sharp. I think we should wait for the fine print and then should take a call. Because right now the kind of run up we have seen, it has run up too fast. Although we are yet to see, we are significantly below their all-time highs, which were a year back or so. But I think the kind of run up, I think we should wait it out for the fine print to come and then may take an informed call.
Right, okay, that's the take coming in on where is it that one is seeing opportunities emerge from the India-US trade deal. Also, sources have revealed that the fine print of the long-term tax holiday for foreign cloud service providers using Indian data centers is out. The move, of course, offers certainty on global income taxation, provided firms route services through notified Indian data centers and resellers approved by the Indian ministry. Prakash Priyadarshi, my colleague, is here with more details.
Well, the Union budget for FY27 provides some sort of tax exemption to foreign company which provides cloud services globally, including in India. The government has decided to provide tax holiday to these firms till financial year 2047. Now, the Finance Ministry has come out with certain clarification in this regard. In fact, our sources in the Finance Ministry say that there are 4 essential conditions for the foreign company to satisfy in order to avail these benefits. these conditions include foreign companies should be notified. Along with that, the data center company in India from which data center services are taken is an Indian company. Along with that, the data center should be notified by Ministry of Information and Technology. In addition to that, the services by the foreign company to Indian users is provided through an Indian reseller entity being an Indian company. So these are key conditions which should be fulfilled to avail these benefits. Along with that, sources also tell us that the exemption provides certainty to foreign companies who are in the business of providing cloud services and procure services from a data center in India. Along with that, there will not be any risk for such foreign companies of their global income being taxed in India on this account. Similarly, the profits on the income from domestic economic activities will remain taxable as any other domestic companies. Sources tell us there is complete level playing field in the sector. In fact, domestic and foreign firms can work together, compete with each other, and and there'll be no compromise on anyone's interest.
Thank you so much for that, Prakash. Now, before I come to Narendra with regard to names maybe within this space and how you can play this theme possibly, let me go across to Osho. Osho, within the textile pack, you've got plenty of buzzers. How should you play it? How are they looking on charts?
See, overall, many of the counters, as already has been discussed, they have seen a strong movement of nearly 30-40% in a week. But overall, on a technical setup, I expect KPR Mills is still on a positive terrain, having a healthy technical indication. So I'm expecting from here onwards, not very aggressive on the accumulation zone because the counter have already seen a huge surge. But technically, it is looking very positive, and I'm expecting that in the coming period, 1120, 1140 can be seen as the next potential target. So majority of the players have seen a decent traction and they have turned the technical parameters towards bullish biasness, but accumulation zones should be in a staggered manner and any dips should be considered healthy after the recent rally. So one should consider the corrections as accumulation purpose, and on the higher end, most of the counters are looking positive from short to medium term perspective.
Okay, that's some of the textile plays which are on our radar. But just looking at the market construct, it's really the usual story. IT is the drag at one end. Within the liquid pool, you've got some of the EMS plays which are now picking up further weight. Keynes, for instance, is up 6.5%. Dixon higher by 6%. PFC is charting up about 6% or so. And then Crompton, PG Electroplast, these are also names which are looking smart indeed. Look at the larger cap universe. That's where you've got an ONGC which is holding out very well. Max Healthcare is holding out well. NTPC is looking good. Titan, Maruti, etc. as well are picking up some more weight. And Kunal, we were talking about as to how the entire PSU commodity play as well has been holding out good. NTPC, ONGC, Oil India, all these charts have begun to spurt up. Any trend that you see in place?
It's very rare to see stocks like ONGC moving up 5-7% on a daily basis. And I think that's been the norm for the stock in the last couple of days. Same is the case with NTPC. Maybe I think this could probably be an indication that the stocks are coming back into a breakout mode after quarters of consolidation. So I think over the last 2 or 3 quarters, or the calendar year 2025, these stocks were stuck into a range of 10% to 15% band for themselves. So for these stocks to try and come out, you would probably want that the beta of the stock increases up higher. And maybe I think that's the kind of indication what these stocks are showing up. But again, these are classical signs of breakouts for both ONGC as well as NTPC. I would believe that for traders who are looking at a time frame of 1 year plus, I think these could be very good level, even after this 5% to 10% kind of a broad up move in the last 2 or 3 weeks for both NTPC as well as ONGC.
Kunal, what about some of the EMS plays? Because you're seeing plenty of traction on those names. I know you spoke about a Keynes, but what about the likes of a Dixon, some of the early movers, as one would call it? Some of them moved on Sunday itself, and thereafter they've moved in different directions all through the week. So talk to us about those.
So, we are at a point where, Harsh, many of these EMS stocks, they are at a 30% to 40% divergence from their long-term moving average. Case in point, for example, for Keynes, the stock, the 200 DMA for the stock is at 5,750, 800 levels, and the stock currently after this 5-6% up move is at 3,700, which means that there is a gap of almost 2,000 points for the stock from its long-term moving averages. These are unsustainable kind of aberrations on statistical basis, because when stocks rally up 40% or 40%, 50% below their long-term moving averages, they tend to narrow down into a mean reversion phase. So even in that process, there could be at least a 500 to 1,000 pointer rally for these stocks from their previous swing lows. So I think in that case, 3,500 was the low for Keynes. I would expect 4,500, 4,700 to be a potential target for the stock before the mean reversion starts to shape up. So it's not a a recovery which could probably indicate that the worst could be out for the stock price. But even if it's a dead cat bounce, there could be a room for another 10% upside for these stocks from current levels.
Okay, that's that on the EMS plays. Of course, looking very, very smart in trade. HAL, of course, is one stock which has been down, from the word go today. That, of course, is a news-linked move, one would say. But is that weakness filtering in on or reflecting on any of the other defense names? I doubt so. Let's just bring up some of those charts and show you how the entire pack has been moving, and whether or not you are seeing any weakness. Remember, Tata Advanced Systems, L&T, Bharat Forge have been shortlisted to build the next-gen ACMA fighter jets after technical evaluation, and HAL clearly got out of the race. But the final winner is going to be chosen about 3 months from now, which is, of course, one of those advanced multi-role combat aircraft program systems. So that's why you're seeing a bit of a knee-jerk reaction come by on a HAL. But Osho, what's your sense? Do you think weakness in HAL today, and if it persists tomorrow more so, should be bought into?
At present, as I already mentioned, that HL is at a very strong support levels. The zone of 4,200, 4,180 is a historical support zone. So one should not be in a hurry to short the counter at current levels. Wait for a follow-up sell-off. If it breaches the zone of 4,150 or 4,160 on the spot levels, then it can be seen as fresh short positions in the counter, and then one can even look for selling positions from short-term perspective. But at recent levels, after the volatility that we have seen in 2 weeks, the counter is at a very strong support levels. So should not be a kind of a bearish view from here onwards.
The other space which is buzzing also today is the pre-engineered building product space. You've got some stocks within that space which are doing well for themselves. And Interarch, let's pull that one up. And EPAC Durable also, a Penar. Those are just some of the names. Narendra, positive with regard to these names, because we're seeing pressure on, okay, so 7% higher on EPAC Durable. And Penar, I wonder what that one's doing. That one is also doing fairly well for itself, if I understand it right. It's up 1% today, but last 5 days it's up roughly 4%, 3% higher. Do you have a view on some of these names?
Yeah, definitely. We are positive on this space. If you see, even in the budget, the government has been very proactive about increasing manufacturing share as a percentage of GDP, and that requires setting up many new plants, be it manufacturing plant or be it assembling plants and whatever. So in all these installations, there is a very critical role the PEB segment, pre-engineered building segments plays, and this has been very positive, and it's a very healthy tailwind for the sector. We currently like Interarc in this space. If you see, the latest results are very good, and the company is also guiding decent growth. The new capacity setup is also coming up, and ramping up should happen. So it will not only add new capacity, but also capacity utilization would also improve. And the company is also targeting the revenues of almost 2,000 crores, which is 20% plus growth for the next few years. So I think Interarc is one of our top pick in this segment.
Okay, that's Interact, and that's looking interesting right now in trade. In the meantime, look at an L&T, a Tata Motors passenger vehicles, Asian Paints, etc., along with, of course, Eicher. They're all holding out quite okay. But Kunal, the chart that I do want to talk about is SBI, given the kind of incessant weakness that we had in the stock up until, I think, yesterday. And do the moves after budget or the trade deal change anything in the whole debate about PSU banks versus privates?
So I think, yeah, it does, to a certain extent, because now I would believe that, the private sector banking stocks could be a lot more favored. In fact, you've seen this in the last couple of days where the likes of ICICI Bank, for example, has come back above 1400 levels. HDFC Bank from 900 levels to 950. Axis Bank has come back towards its previous highs. So these larger cap private sector banking stocks have seen a good recovery, and the pace for rally for these PSU banking names, it's stalled or maybe halted a little bit. So, when you look at the charts for SBI, PNB, Bank of Baroda, etc., these stocks have shown recovery, but then they've not managed to break past about their previous, highs which they've made a couple of weeks back for themselves. So, I think in that context, we are looking at potentially a resurgence of sort from for the private sector banking names, and maybe a tad bit of an underperformance for the PSU banking stocks. I would still believe that SBI is one of the best available stocks in the PSU banking names, and in case if the stock happens to drift a little bit lower from current levels, say till 1050, 1040 mark, that could be a point where traders could look to accumulate further.
Osho, PFC, REC, again, these are stocks which have come back to the fore on the back of that clarification that they're going to hold a board meet, at least PFC did, that they're going to hold a board meet to try and consider the restructuring which the government announced in the budget. And you look at the move on the stock, it's 5.5% higher, PFC. REC also up around 2 to 3% in trade. What's the view there?
I'm expecting a kind of a pullback in both the counters. PFC already have seen a decent surge, and today it has moved beyond the 200-day simple moving average. So I'm expecting that in the short-term period, there might be a continuation on the higher end towards the zone of 430, 435, where we have seen multiple rejection and can be seen as a multi-week resistance zone for PFC. But overall, both the counters are looking positive at present levels, and there is possibility of further momentum in the coming period. REC, I'm having a bullish bet also that one can look for accumulation at current levels. Near about 400, 412 will be the positional target for the counter, while on the lower end, 365 is a very strong support level. So I'm expecting that in the coming period, both the counters can see some kind of a strong performance coming forward.
Right, okay, understood. Another news piece that we're picking up, the government has notified the February 5th, that's tomorrow, as the date for enrollment or enforcement of Sabka Bima, Sabka Raksha amendment of Insurance Laws Act 2025. This formally, of course, operationalizes a major reform package for India's insurance sector as well. My colleague Anurag Shah is here with more details on what this implies.
Insurance Act Amendment, Sabka Bima, Sabki Suraksha insurance reforms are getting implemented from 5th of February. Central government has issued a gadget notification for the implementation of insurance reform. But Section 32A of old Act and Section 25 of new Act, which prohibits common directorship, is put in abeyance. So there was a concern from banks, insurance companies, because the clause will restrict directorship, common directorship in insurance companies and banks and investment firms. But government has put that clause on hold. So no issues for banks director who are part of the bank and director in insurance firms, also like in ICICI Bank director, also in ICICI Pru or ICICI Lombard, or director in State Bank of India and holding a directorship position in SBI General or SBI Life and in few other insurance companies also. So that clause which was restricting the common directorship is put on hold. So other reforms like 100% FDI, more power to IRDA, the merger between insurers and non-insurance companies, all are getting implemented from 5th of February.
Okay, thank you so much for that, Anurag. Of course, that's the take coming in. I wonder, Kunal, one stock in particular, Lloyd's Metals, that one is up 10% on the back of numbers, of course, but give us a sense of how this one looks on charts.
Yeah, I've seen the long-term charts for Lloyd's Metal, and the stock has been a huge multi-bagger over the last 4 or 5 years. I think Lloyd's Metal was a stock which was 10 rupees or 12 rupees in 2020, moving towards almost 1500, 1600 plus mark. post that. So I think it's come back towards a good corrective phase from the 1600 levels in 2024. Recent correction for the stock was around 1100 mark. It's still trading below the 200 moving average, but 3 consecutive days of price uptrend probably makes the indicators a little bit overbought.
Okay, that's the take coming in right now on Lloyd's Metal. Of course, PFC REC, that continues to be one duo which we're tracking. And of course, they've secured a strategic 6-year contract as well with the global EV OEM. And that's why some of these names have been in focus. But 2.5 minutes left to go before we wind up for the day. Osho, given how trade has panned out today, what's it looking like? Of course, lots is going to depend, I guess, on which way globally things pan, especially with regards to, the way the IT sector may move from here. But other than that, just the Nifty charts, given that other than IT, a large faction of the market was resilient and held out.
See, overall, I am still bullish in the market and expecting that once Nifty breaches the zone of 25,800 on a decisive manner, then we can see continuation on the higher end. Today also, because of IT major, the counter has, all the benchmark index has seen some kind of restriction on the higher end, but have thoroughly maintained the higher zone. So I'm expecting going forward, one can look for bullish biasness only in the market, and 25,800 is the just mark because the OI accumulation is majority in the strikes of 25,750 and 25,800. So once those things cool off and there might be short covering in the coming period, then we may witness another 200 point of rally. So overall, one should look for buying opportunity only, but I'm waiting for some kind of further correction towards the zone of 25,650. That will be an apt zone to accumulate Nifty, and 25,800 first target followed by 26,000.
Okay, all right, Osho, Narendra, thank you so much for joining us this afternoon. We'll let you go on that note and let's begin wrapping because last few minutes of trade as we see it, the Nifty is up just about 0.1% thereabouts. But really, the decentish move is coming from the Nifty small cap as well as the Nifty mid cap indices. Why is the Nifty 50 not responding as well? It's largely because of the drag coming in from the IT stocks. And when I'm looking at the contributions on the Nifty 50, IT is obviously the predominant negative contributor there. Infi, nearly 100 negative points, TCS over 50 negative points, HCL Tech, Tech Mahindra combined around 30 odd points. So that takes the cumulative total to nearly 180 negative points between these 4 counters alone. And that is what is impacting the Nifty 50 index today. That's where the pressure is coming from. The Nifty IT therefore has sulked 6% at close now. 2% higher though for Nifty oil and gas because there's gains across the board except IT and defense. I'll talk about defense in just a minute. 2% higher on oil and gas, 2% higher on energy. You also have metals 1.3% higher, auto doing well as well, 1.1% higher. The realty index is up 0.9% as well, so it's good traction across the board. The Nifty PSU bank gained over 0.5% as well in trade today. Defense is the other culprit. There is pressure on the defense index and some of the names led by HAL are the culprits for that one. Pharma index closes mildly in the red outside of these 2 indices as well. Broadly, that's the take. The breadth was favorable and that's the other big positive. That's of course a wrap of the day and we've closed for the day. Kunal, how's it looking today in terms of the move? And what's in store? Because we've still got Thursday and Friday to go. We're done with 4 trading days this week. It's a long week. So talk to us about what we can expect.
Not you alone.
It already looks like a Friday. It's only Wednesday. So I think on the markets, of course, it's been a good closing for the index, not just in terms of the points close, of course, but today's move is more, where market breadth starts to open up. There are days when, it's like the opening batsmen, they flurry, and then it's the middle orders which have to take, the task. This is the time where the middle order is getting set because you're looking at the mid cap, end of the market, looking a little bit more better. The mid cap index has come back about the 200 moving average. Market breadth is 2:1 in the favor of advances. I would believe more such days where you probably expect the market breadth to open up, even if it comes at a cost where the index just about consolidates for the next couple of days, should be considered very positive for the index.
Okay, Kunal, thank you so much for joining us this afternoon. And viewers, we're out of time. but bringing the budget discussions on ground. ET Now is hosting the India Investment Summit in Mumbai this Friday. Thought leaders, visionaries, policymakers, investors, MSMEs and innovators all present to unravel what the Union Budget of 2026 has to say, analyze its impact and chart the country's economic direction for the year ahead. The summit puts the spotlight on India's BFSI sector at a pivotal moment between tariffs, currency, valuations and how the implications of the Union Budget will likely unfold and the forthcoming financial year, of course. Tune in to ET Now, India Investment Summit. And with that, it's a goodbye on this edition of Closing Trades. Thanks so much for joining us. From all of us here, thank you.
Presented by SBI, the banker to every Indian, truly.
Co-presented by SBI Life, अपने लिए